Good morning, everyone. Markets are just chopping sideways, really not going anywhere. And yesterday I spoke about, stepping out to higher time frames to get a perspective while we into this kind of a choppy scenario here. And then just put it in perspective. The higher time frames are higher. That doesn't mean you necessarily want to sit through what's happening. In this case, it's just been a choppy sideways correction. So, if you're holding like spiders, ETF, really, the S&P 500 or QQQ, or probably some stock like an Apple that you want to hold long term, well, you just sit through this. There are situations where you may want to exit some of that position, selling covered calls and sitting through a correction. Now, that being said, you decide, you're just doing nothing during a time such as this where the markets are trying to figure out which way they're going to go. You decide, do you want to be an intraday trader? That's not for everyone. I've taught a lot of individuals that have come for education that said they wanted to be an intraday trader, but they find out afterwards that they're really not just cut out for sitting in front of a computer screen throughout the day. They may find out that they just want to trade the first hour or so in the morning, which is fine. There's strategies for that. But as an intraday trader, there are setups that happen every single day. Sometimes you need to be patient. Even, as an active trader, you do need to be patient and wait for setups to occur. But even before that, you need a game plan, a trading plan, a set of rules. Otherwise, you're going to be all over the place. So I thought I'd offer you a very simple one that I use and have taught for many years. What I like about it is it's simple, it's easy to follow, and these charts right here on the right side are what you would use. Now, you'd start with the daily chart just to get a perspective of, up, down, or sideways, but then you go to the 60 as your long-term bias and say, is it above the 20 MA and rising? And that's just a quick visual aid, as I like to call it, or a guide. Is the trend going up? Is it going down? And over here, the 20 MA is just starting to roll over. And it's where, on a side note, this is where a lot of traders, those involved want to get learning about technicals, get caught up into, which moving averages are best. An exponential one it reacts faster, or maybe you're going to use a 10 or an 8 because it reacts faster. It's price that you want to follow. So as the price is dropping here and they're under the 20 MA, it's the 20 MA rolling down, which tells you that the trend has matured a bit. Whereas here, the 20 MA was intersecting prices, going back and forth through the moving average. And in essence of that, when the message of that is, basically stay away, don't do anything, where you weren't doing that, at all, anything, even as an intraday trader. Now, once you have that part of it down or in perspective, hey, prices are moving up, prices are moving down, prices are moving sideways. It doesn't get any easier than that. Once you've determined that, now go to your 5-minute chart. If prices are going sideways and chopping back and forth on the 60, don't do anything. If they're trending up, you look for longs above the 20 MA. Buy pullbacks to support. Here, the 20 MA is in alignment with a minor support level. And of course, you're going to look at your candlestick patterns. This setup here is quite a bit cleaner than this one, where you have a lot of overlapping bars, where this one is more fluid. The opens and closes are about the same. The momentum slows down, and then you get a green candle that turns up. That's a very clean, clear setup in alignment with support, and your 60 MA is pointing higher. Right? Now, how to use the daily with that? Well, the daily comes up to resistance. It's likely that you're going to get a stall on the 60, and you look for little choppy sideways action there. Then once it turns down, you go to your 5-minute chart and you look for setups below the 20 MA, and you look for sell setups, reversals, retracements, and reversals. Sideways, you look for breakdowns. So retracements and breakdowns. Sideways into the 20 MA, when it reaches it, that is a a guidance that prices are likely to resume the trend. But one of the takeaways from that is the fact that as prices did drop, okay, prices dropped here, rather than retrace, they went sideways. And here, it created a little swing high, and then it tested it. So this little double top creates a little base there. And that's your breakdown scenarios where this is what I call creating a resistance area within a downtrend with multiple time frame alignment. So there it is, a really quick, easy way to decide, this is a mess. I'm not, if long term I can sit through that and wait for this to resolve itself one way or the other. And while it's doing that, I have a set of rules, up, down, sideways, traded accordingly on the 5. Hope that helps. We'll talk tomorrow.